Welcome to the Stocks with Josh show. Today it's going to be a little bit of entertainment. We're talking about Sam Bankman-Fried and BitBoy and a little bit of education. I'm going to give you guys a micro mini options class because I get asked so many questions about it. I think it'll be helpful for a lot of you guys who are trying to start your options trading journey. Then we're going to use Tesla as well as the SQQQ as an example options play. And at the end, I'm going to give you guys some fresh technicals for SOFI and Chargepoint. Let's start off with this clip.
What about the governance of this? Because one of the things we have not talked about is you had no board and you had no CFO. And that should have been a red flag, frankly, for all of us.
So interestingly, in some ways, we had too many boards. We had...
Oh, goodness. Hopefully we're going to get...
All right, so we've been listening for the past hour and 5 minutes to an extraordinary interview of Sam Bankman-Fried, the former...
Guys, there's a lot that I could say to unwind everything that Sam Bankman-Fried said the other day. But what really stood out to me the most is how that video ended. He was asked a point-blank question about his board of directors, and he came back with the answer, oh man, we've got a lot of people who are involved in this and a lot of people who are behind the scenes. We've got a lot of boards, he says. And as soon as he said that, the plug was pulled. And I'm just going to tell you that the lawyer was sitting on the kill switch of that interview. And the very minute that Sam Bankman-Fried said something that was going to really bring the truth to light, because that conversation was not about the truth. That conversation was about spin, hypocrisy, and spreading lies. But the minute that the truth was starting to come to the surface, that kill switch was flipped and the interview was over. So I'm not going to say much more about that, but basically the question is, who's on your board, Sam? Gensler, politicians, mom and dad, Dr. Evil? I know you're not alone, and I know that at some point it's going to come to light. I enjoyed Larry's coverage of it yesterday, and I enjoyed reading all of your guys' comments as it was unfolding. And I want to point out a conversation that stood out to me the most. It was by a gentleman by the name of Anthony. Said, man, white collar crime, you gotta love it. SMDH. To that, a gentleman by the name of Diddy said, what about prison? ? And then Diddy followed up with, if I stole $7 billion, I'd be in jail. And that cannot be said any better. You and I both know it, that this is laws for them that are different than laws for you and I. If we did anything close to this, they would lock you up and they would throw away the key. But here he is in broad daylight, being given the opportunity to explain himself to the world and make all of his excuses. He should be in an orange jumpsuit in front of a judge, being interrogated and asked questions by a lawyer who is bringing him to justice. And then to follow it up, one of the other comments was by a guy named Rich Mack, who said, $7 billion? You mean you'd be dead? Guys, that is even the next level up. But the fact is, this guy is free and going about his business. And then a comment right after that, and I'm not going to cite the source of that one. The guy said, dude is delusional, too altruistic. Guys, that is a narrative that I'm just going to say is not true. This is not a misguided, altruistic, misunderstood youth. In my mind, this was intentional, strategic, and planned, and there are a lot of people way smarter than Sam Bankman-Fried that were behind this malice to the American people. Let's go to this clip by BitBoy.
It's me! I'm the one out here putting the work in behind the scenes trying to save crypto while these devils, Sam Bankman-Fried, Brian Armstrong, they're trying to permanently ruin it. This is not about money for me. I hope you guys understand this. I'm here fighting for you. It's me. This guy with these freaking glasses on, this douchebag, is out here trying to tell you that only the suits know what to do. Only the suits. Only the people who have all the money. They're the ones who can determine what happens. No, our bill is for the people. And you're going to find this out. I don't represent the people, I don't.
I think that BitBoy expresses the anger that a lot of crypto retail investors who have not been protected are feeling right now. I have a different path to walk. I can't take my show and make it about me screaming at regulators. I will, though, set the record straight. I'll give you guys a little bit of what guides me. There's a verse in James 1:20 that says that the anger of man does not produce the righteousness of God. And the only thing I'm going to say about that is this. Once people get past the point of being angry, once they get past the point of expressing their rage, and I'm not going to stop them, I'm not going to discredit them for expressing those feelings. I'm only going to say that we still need to make decisions as a community, as a crypto community, as a group of investors. We need to support people that are actually going to fight for us and are looking after our interest. I know it's not easily figured out who exactly those people are, but I think that that is the goal. And I'm going to continue to call it like I see it. That's the best that I can do from this small platform that I have. Hey, if you guys are enjoying this, hit the like for me, say hi in the comments section, and make sure that you're subscribed. And if you want to join this community, this family, then hit that notification bell and come on board. Okay, let's get into our mini micro options class. For a lot of you guys that are trying to begin your journey of option trading, I'm going to break down the super basics. This isn't going to prepare you to jump in and begin to trade options. This is just to familiarize you guys with some of the concepts and the terminology. Okay, basically, what is an option contract? An option is not any ownership of a stock. It is simply the ownership of a contract that is tied to potentially buying a stock. But right away, let me explain to you that even if you buy the option, you do not have to buy the stock. You can trade the option and you can go up and down, and you don't ever have to pony up for the money to buy the underlying stock. So don't be afraid of that. When you buy the option, what you're buying and what you're spending your money on is the cost of the option, which is referred to as the premium. This is simply the right to own the option to buy those underlying shares. But again, so many people get caught up because it's very confusing. If I buy the right to buy those underlying options, don't I have to eventually, if I guess the correct direction that the stock is going, don't I have to eventually buy those underlying stocks that it's tied to? The answer is no, you absolutely do not. You can freely trade the option, whether it goes up and down or whether it expires worthless, and you never have to buy the underlying assets. Okay, so once we get that out of the way, there are two different types of options. There's call options and there's put options. And you guys probably know that the call options is a bet that this underlying stock that the option is tied to will go up in value. And these are leveraged positions. And if that underlying stock goes up in value, your call option will also appreciate in value. And then you have a put option. The put option, okay, is tied to the idea that the underlying stock will go down in value, but when it goes down in value, because you guessed the price correctly, your put goes up in value, and that's how you profit. Now, both options have two basic rules. You've got a strike price that you are believing that the option will get to, or that the underlying stock will get to. That's your strike price. And then you have an expiration date, which means how long that contract will be valid. And that's one of the very important rules that you have to understand is the very minute that you buy an option, a call, or a put, there is a terminal date. There's a point at which that option will expire and become worthless. So let's talk about those scenarios. Let's say that you bought a call option and the underlying stock that it tracked skyrocketed in value and your call option went way up in value as well. Okay, and then you get to the place where your option contract expires, because every option contract has a future date in which it will expire. Some go out months and months, some go out years actually. So you get to that date where it expires. What happens to all that money that you made? Well, if you had the money in your account, your exchange has the right to actually close it by giving you the underlying shares. But you can easily sell it the day before it expires, and you will simply get the premium of the profit that you made. The premium profit would be everything that was above your original strike price. So let's say you bought some options at $1, and you believed that the underlying stock was $10. Okay, so it was $1 option, $1 call option, and the underlying stock was $10, and you bought calls. So you believed that the $10 stock would go up in value, okay? If it went up to $15, okay, you're not going to get back the dollar you spent, because that's a premium that went to the guy that you bought the contract from. That becomes his. It becomes off the table. What you're going to get, let's say, is everything above your strike price. So let's say that your strike price was $10. You would get the 11, the 12, the 13, the 14, and the $15. So you'll get the difference between the premium price and where the price settled above your strike price. You know, some of you might be thinking already, this is getting kind of confusing. This gets picked up through time and experience. So there's a couple things that I want to break down with options. There's a term called theta. There's 4 Greeks to trading options, and I'm not going to deep dive that now. I'm just going to simply tell you that the one that's called theta represents the idea of time decay, which means that the longer that you hold your option that you bought for $1, if the stock does not move or go up or do what you thought it would do, the value of your option, your call option, the premium that you paid the seller, that begins to whittle away. It goes from $1 maybe to 90 cents, maybe to 80 cents, maybe to 70 cents, because time is decaying the premium value of your option contract. All right, then people have asked me a lot today even, what about in the money and out of the money? What do those terms mean? Well, in the money means that the current price of the stock, let's say the current price of the stock is $10, you could buy an option contract that is at $11. So it means that the price of the stock is well underneath the contract that you've currently purchased. That would typically come at a higher premium cost. But you could also buy a contract, a call option, that was way out of the money. It could already be a call option with a strike of $15. It means the stock hasn't gotten there yet. But if you get the time frame correct for how long you're going to hold that, and it gets to $15 very quickly, you'll realize that the price of the premium of that option will increase in value quite a bit. Guys, I know this is thick. I'm just going to cover it as concisely as I can and break down some of the points. Don't get overwhelmed by it. Through experience, you guys can learn this. And then there's a concept called implied volatility. And again, don't try to absolutely master these terms from day one. I just want to introduce them to you. Implied volatility is priced into the premium, and it represents the value of volatility, how much movement could occur in the price of the underlying stock that the option is tied to. And so, for example, if that stock can every single day move up to $5, so if it could go from $10 to $5 and back down to $10 in a single day, then the implied volatility is baked into the price of the options. These are things that you have to be aware of. Sometimes people decide that they want to jump into an option and they think, I want to make money because I think this is currently $10 and it's going to go up to $15. And they don't realize that the volatility of that premium price has already baked in and it actually has to go to $20. Or they don't realize the aspect of theta, which is time decay. Now, I'm not meaning to scare anybody off from option trading. Option trading can be extremely profitable. The majority of my trades over the last 3 to 4 months have been option trades, and I can tell you that they've been very profitable. But there's so much to learn. And so I'm going to leave you guys with a very simple recommendation. If you are even thinking of doing any form of option trading and you haven't taken a course and you haven't been taught carefully how to do it, I would just tell you, consider buying a single option contract with the goal of holding it for a single day. So what that would allow you to do, it would allow you to understand how to open and close the position and to determine whether or not you could guess the correct direction, and also see that if you didn't guess the correct direction, how quickly the value of your option, which is the premium, could disappear, right? And I would open and close it in the same day. I would try to pick the high or the low of the day, and I would try to sell it and make some profit. Now, if you guess terribly wrong and you didn't, and you begin to get a new set of eyes to sort of understand that implied volatility that I was talking about, then you could still close it up. Don't try to hold it and see if it turns around for you. Close it up, walk away from it, observe it for a few more days, and then attempt to get into it again. But this time you're going to hold it for the goal of 2 days. And then you could do the same thing of holding it for the goal of 3 days. But you're only ever buying one option contract. This is the best way of beginning is teaching yourself trading is to limit your risk, which is done by limiting your position size. And I would say that this can apply to so many things. It can apply to swing trading and day trading and penny stocks. I said this before, that if you want to be able to control the outcome, you have to control the risk. And to control the risk, you need to control the position size so that you can sleep at night. And that's the same exact rule of thumb that you'd want to apply to options. Final thought, with all my years of experience, I still like to buy a single option and hold it for a number of days so I can learn its price action through observation. Options do not trade the way that stocks do. So when you get into a stock, you can look at the chart and you can determine that it largely maybe only goes up maybe 10%, 20% on a big ripping hot day, but options can move hundreds of percent every single day. And so if you're not familiar with that degree of volatility, or you're imagining that stable stock that you've been following, that the option would correlate and also be stable like the stock, then I just want to tell you in advance that isn't the case. Options have enormous volatility and can move hundreds of points in a single day. So start off really slow. All right, before I go into the charts to talk about Tesla, SQQQ, SOFI, and Chargepoint, I'm going to briefly talk about my affiliate, the moomoo investment app. It is a zero commission, free to trade app that you can use on your mobile, your iPad, and your desktop. They are licensed, registered, and insured. They have the lowest margin rates for any retail trader. You've got the free level 2 data. You've got the stock screener that'll help you find hot stocks to trade every day. And you've got the trade order types, like your stop orders and your stop limit orders and your take profit orders that you need to protect your capital and to take profits. And right now is the best time that I've seen to open up a moomoo account, because they're offering 15 free stock at the lowest deposit rate with the chance of winning $60,000 cash. This is their limited time exclusive holiday offer. And if you come over there and you join the moomoo app, you can join the Stocks with Josh community page, as well as joining the Stock Josh Fam chat group. Hope to see you guys over there. Click the link in the top pinned comment and come find us. Okay, I'm going to keep these comments regarding Tesla very simple. Right now you're looking at the daily chart of Tesla. There is a moving average line, 50, 100, and 200. I just want to point out that when these lines point downwards, like they are, and they begin to spread apart, so you've got the green one right now, that's the 50, the blue one is the 100, and the red is the 200. When you see these begin to fan out like this, and they're not touching and they're pointing down, that's typically a extremely bearish signal, right? Oftentimes when these point down, they can continue to be fanned down like this, and we could get some pretty significant drop in the price of the underlying asset before going back up. Now, I know that a lot of people are bullish on Tesla. I'm not saying that we're hitting down to 64 bucks, but I will definitely tell you guys that those pointing down moving average lines that are fanned out the way that they are right here, I would say that is a classic bearish signal. So largely, I'm going to be talking about buying put options on Tesla, but there's opportunity for call options as well. I'm just going to tell you that I see this is how it breaks down in my eyes. We came down, we've got this descending channel that you guys see that I've drawn here in the blue, right? We've moved from the top of that channel up and down with the markets. And I want to point out that even though the market right now, if this were a chart of the SPX, you will see that we're all the way back up here touching the top trend. But look at where Tesla is. It's really practically near the bottom of its trend, which really is a signal of weakness, something we need to keep our eyes on. So this talk is going to be about buying put options for the next leg down in Tesla. Now, I don't know the direction. It is purely speculative. The way that you would want to trade that is level by level. And I think that Tesla breaks up nicely into some different levels. There is currently sitting at resistance right now at 195. So Tesla came up, it hit that wall of 195, and it stopped. But let's just say that we continue in a very, very bullish direction in the market. The very next area where we're going to see a lot of resistance is at 200, and then respectively at 205, and I think we're going to see the most resistance at 210. I think that's a very big area of resistance on Tesla that we're not likely to see it break through. And so the way that that could be traded with options is you could buy a call option with a stop loss at 194, and you could ride it up, and you'd want to close the position before the end of the day to see if we could get up to the $200 mark. And you could consider buying a put option at $200 to see if it rejects and goes back and tests the 195. And I just wanted to point out that that's kind of the way that you would consider playing these. If it broke above the 200, then you know that you could consider buying your next put option at 205. And if you could put a stop loss directly above the 205 at 206. If it then broke all the way up to 210, you could put the stop loss above 210 at 211, right? You could play this day by day, and you could open and close both calls and puts playing those different levels. But to keep it really simple right now, I think that Tesla is showing a lot of bearishness in that it's at the bottom of its channel, whereas if you went to the SPX, it's at the top of its channel. And I think that we do have a nice bounce off of the 165, which was also a historic support. So that's good. I think it's very likely that we will come back and at bare minimum test the middle of this channel between 205 and 210. I personally would probably trade this confidently at 210 on a put option to come back and to retest 165. Of course, I don't really see why Tesla would break out, but if they had some really good news, they could do what they should have done here since the beginning of October, and they could actually go to the very top of the range right here, which would be another great place to short Tesla. But at the moment, I'm looking more at the 210 area for a short. All right, guys, now we're looking at a chart of the SQQQ, which is a ETF that goes up in value when the NASDAQ, as measured by the QQQ, goes down in value. So when the NASDAQ falls, all the stocks that represent the NASDAQ, when they fall, then the SQQ goes up in value and appreciation. And I just want to be clear that the best place for me to consider buying the SQQ would be for a bounce off of this trend line that has repeatedly been very, very profitable. The last time I gave you guys a definitive buy signal was when the SQQ had bounced and began to go back up. And then we rode that up all the way to this pinnacle, made a ton of money. Now we've been waiting for it to come down. We've been riding the TQQQ. But I just want to say that one of the things that tells me that this market still has some upside is the fact that the SQQ has not come down further. And even though I am going to be taking a position that increases over time in the actual stock, everywhere from $40 and below, I am going to get into my call options on SQQ when and if we get to this strike price. Now, if we begin to go back up and break above this line right here, I will also consider buying call options because I believe we may be seeing a much greater reversal to the SQQ. That's how I'm playing the SQQ with options. Okay, I'm going to keep my comments on Chargepoint very simple. Today, Chargepoint came out with their Q4 earnings. They had a miss on earnings per share and a beat on revenue. It's good to see that they're increasing their revenue. That's super important. But the earnings per share says a lot about the quality of how the company is being managed financially, fiscally. And so a miss there in a recessionary environment could be taken pretty hard by Wall Street. And here's one of the main things I want to point out to you guys. Whereas the SPX is basically at the top of its trend, we see that the EVs, Tesla, NIO, some of these other companies are on their lows. These are the lows. This is a long-standing low for Chargepoint. Right now, this, if it were to look like the rest of the S&P 500, it should be way up here. And so that's a really big concern for me right now. It's sold off into the rally. Guys, it's so important that I can make this point. I know that some of you guys fall in love with these stories, but you cannot chart with your heart, as Keenan says. And this is the main takeaway and the reason why I'm talking about Chargepoint today. Many times I've advocated it here as a buy. But right now, this thing throughout the month of October and early November has been selling during the rally. And that is a pretty bearish sign. So the only thing that could save this would be a phenomenal news story or an unexpected beat on earnings per share and revenue. And as we know today, it didn't get that. And so I would caution you and say that we very likely may retest this previous low that we had back here at around $9, or even break that low and create a new low. So you need to be mindful on the risks associated with Chargepoint. Okay, real quick, I'm going to jump into the Perion network chart. This is a stock that I gave to the family 4 months ago as a value stock play for me moving forward. I gave you guys this stock when it was around $18, $17, and I want to point out today that we have hit a new high of near 50% increase from when the stock was called. And the reason why I'm pointing this out to you guys is I want you to keep an eye. I want you to look at this stock and how it's performed during this rough season, right? And then we're going to take that and consider what is it telling us versus what are we seeing in the Chargepoint, the SOFI, and even the Tesla stock. What is the relative strength showing us? So let's take a quick look into the SOFI stock. Okay, guys, we're looking at the daily chart of SOFI Technologies, and I'm going to keep this really simple. Obviously, it's been in decline, and one positive thing that we might be able to identify is that once we got to this area of $5.28, it has somewhat been moving sideways, and this can sometimes be referred to as an area of consolidation. But here's the problem that I have with SOFI and why I am reluctant to say that this is a qualified zone of accumulation, because we really have fallen beneath that $5.28. And a true consolidation zone that you want to consider adding to would be one that would hit a bottom like we had at 528. It came back up, it came back, and it retested that, right? So that was reasonable for people to consider buying at that point once it bounced. But once it went back up and it came back and it broke beneath that 528, it really unvalidated that consolidation zone. And so it really began to indicate that it was still in decline. Let's just think back on what the Perion chart was showing us, that even in the midst of all of this turmoil in the market, it's continuing to move upward. It's showing strength. And right now we see that SOFI has broken that critical level of 528. It broke it right here. It's attempted a couple times to reclaim it, but it's failed. Remember, the market's been going up since early October, right? And SOFI has failed to hold that 528 level. You have to understand that stock prices go up in value when there is a clear path to an increase in earnings quarter after quarter after quarter. And if SOFI does not have a clear path to years of positive exponential earnings growth, then the stock will continue to fall until that narrative shifts and it can convince the market that the stock will go up. So we don't know where SOFI is heading because it has not been able to hold a line here. At this point, I would like to see SOFI reclaim $5.28 and hold that for a prolonged period of time for me to consider that it's truly in a consolidation zone. So SOFI would be a sell to me until it can reclaim and hold that 528 for a period of time. All right, well, we've covered a lot today, but don't miss the next mini options class. Hit that like, the subscribe, and join the family by hitting that bell. Let's continue the conversation here in the comment section and over on the moomoo app. As always, my friends, peace and blessings. Take care.